Good morning. Welcome to IG's early morning call. It's Tuesday, 20th of June. Let's take a look at the headlines as we wait on what could be a slightly lower start to the European equity trading day today. But the headlines circling around what's been happening with the Aussie falling after the publication of the most recent minutes in which it raised interest rates by 25 basis points. But it was a very delicate decision, according to the details released today. No discrimination, no advantage, no real big moves outside of that. But we do have some interesting news coming through from the PBOC. The People's Bank of China has cut the loan prime rate by a further 10 basis points, further easing of monetary policy in the Chinese economy. And we've got the Chinese yuan continuing to sink near 7-month lows against the US dollar. And Intel ramps up investments, the third deal in 4 days. Today, or yesterday I should say, but the effects we felt today is the conclusion of a deal in Germany, in which Germany contributes quite a lot of money to Intel's investments into the country. It's one of the biggest inward investments we've seen in Germany. Let's take a look at what's happening on volatility. Bumping along the bottom, 1659 is where we are. And despite the fact we've not got much move there, we do have a little bit of a direction on the European equity markets. And you can see here, third day in a row of losses on the 24-hour markets for the FTSE 100, not too far away from the 200-day moving average at 75.73. Certainly, if you're short on this, stop goes above the 7,600 with a view to taking that market further on down. And it's the same sort of thing in Germany. But of course, remember, we had that new intraday all-time record high on the German DAX at the back end of last week at 16,430, 16,157. Again, a short trade would have your stop above yesterday's candle. And it's the same sort of deal pretty much across the European equity markets. Second day in a row of losses. We're now trading below the 100-period moving average for the French CAC 40. Let's take a look at what's been happening in the Asia-Pacific markets overnight. We have been hearing about the Chinese electric vehicle market, which is now expecting really to lead the world, I think, despite the fact that Tesla is doing well. But China's got all the new innovations. So I'll have a little bit of an update for you from Angeline in the next 15 minutes on what's happening at the EV car show. Nikkei 225 down 0.25%. Hang Seng Stock Index, you can see they're leading the decliners. In today's session, we do have a rise in the Australian benchmark of 0.9%. Wall Street back today after yesterday's day out. We've got, or looking back to Friday, I should say, losses across the board on these markets. And if we look at the 24-hour markets, you can see that high that we saw initially on the Dow Industrials. They're at one point taking us there to levels not seen intraday since the 13th of December 2022. The markets looking as though we could well build on the drop that we saw in yesterday's session on the 24-hour markets on the IG platform. The tech-heavy NASDAQ in the Friday session, just to quickly remind ourselves that we had the highest print on the markets there, not seen since the 20th of January 2022. So it's something like around about 17, 18-month highs for that index. And then came yesterday's pullback, Friday's pullback ultimately on the cash markets, and then pullback yesterday on the 24-hour markets, and we're pretty much trading where we were as at the close yesterday. So waiting for the US to get back in gear on the cash session later on today. Meanwhile, the RBA decision out earlier today was an interesting one. Decision to hike rates early this month, finely balanced. Australia's central bank coming through with the announcement overnight at the minutes of its last meeting when the members decided to raise interest rates by 25 basis points to 4.1%. Finely balanced because consumer spending is slowing in Australia, but on the other hand, it felt the risks to inflation have shifted to the upside. Rising wages were a particular worry. Members discussed the possibility, according to the quote, of implicit indexation of wages to past high inflation and the potential for this to become widespread. In other words, a wage price spiral. No one wants that because that is a real generator of really heavy amounts of inflation. Similarly, the quote went on to say, members observed that some firms were indexing their prices either implicitly or directly to past inflation. Now, this behavior has raised the risk that inflation would not return to the RBA's 2 to 3% target band in a reasonable time frame, instead remain elevated. Now, because the decision was finely balanced, I think this is one of the reasons why we've seen the Aussie dollar move in today's session. It's down against a basket of currencies In today's session, you can see there's a relatively wide move down at 68.03 for the dollar, Aussie falling against the US dollar. Meanwhile, as widely expected in China, it's cut its lending benchmark rate, LPR, the loan prime rate, by a margin of 10 basis points. It's the first time in 10 months. The one-year loan prime rate was lowered by 10 basis points to 3.55%. The five-year LPR cut by the same margin to 4.2%. There was virtually no doubt the PBOC would cut rates after having done the sale last week to its short and medium-term policy rates. Now, the yuan weakened on the news. This is demonstrated by the third day in a row of gains for the US dollar traded against the Chinese yuan. We're now not too far away from the highs that we saw back in November 2022 for the dollar against that weakening Chinese yuan. Let's get some up-to-date news coming through from the European economies. German PPR coming through, producer prices falling 1.4% in May month-on-month. Economists expected a 0.7% drop. Year on year, there was a rise of 1%, but the consensus had been for a far higher read than that. Just wanted to update you on what's happening with the euro-dollar trade. Not really much going on, to be honest with you, after the gains that we saw towards the back end of last week for the euro against that weaker US dollar on that inflation data and the Fed's decision to leave interest rates on hold. 109.29 is where we're trading there at the moment. Just want to update you as well on what else is happening in the foreign exchange market. Second day in a row of losses for sterling against the US dollar. We've got the Bank of England meeting tomorrow and Thursday to decide on interest rates. We got that announcement at noon on Thursday. We'll be live on the IG platform watching sterling in regard to that. There's a lot of commentary now in newspapers you'll have seen about the incoming mortgage crisis, incoming housing crisis. If the Bank of England does go ahead and raise interest rates, it really has no option because its mandate is to keep inflation under control, and inflation is not under control. So widely expecting a 25 basis point rise in interest rates come Thursday. There's some outlying economists suggesting that it could even be 50 basis points this time around to quell that inflation rate. Now, if we see any further upside for sterling at 127.82 and you're long on this, stock goes below recent price action, your price target will be this 130 level up here, this red dotted line, not seen since the back end of April 2022. Let's steer the conversation away from currencies and move on to some of the corporates. Nothing major new out this morning, but I want to take a look at the opening day of the Paris Air Show. Airbus announced a historic order from the Indian budget carrier Indigo. Now, after months of negotiations, Indigo has agreed to purchase 500 narrow-body jets from the A320neo family to be delivered between 2030 and 2035. As is always the case, no financial details are revealed, but Indigo continues to hold separate talks with Airbus and rival Boeing for 25 wide-body planes, which could either be Airbus A330neos or Boeing 787 jets. We're watching what's happening with Airbus. This is the French-listed Airbus. You can see, actually, if you look at the trading day yesterday, a really big spike up before a pullback. Now, the big question is this a shooting star candle? You can see when we get these push higher, these very heavy wicks on the upside, you then get a pullback in the market. So is this an opportunity to sell? If you're brave and you take that opportunity to pull this market back after that inverted hammer or shooting star candle, your stop would go up here to around about the 130.50 level. 131.67 is where we are after that news out yesterday. And you can see, actually, despite the fact we've been at levels not seen since the 14th of Feb, we're really not too far away from an all-time record high at 139.30. Now, after the 470 planes Air India ordered this time last year, Indian carriers now have the second largest order book with over 6% share of the industry backlog behind only the United States. So EADS taking part in this massive order that Indian airlines are planning across the world. Let's stay on the charts. I just wanted to update you as well on what's been happening with Intel. Intel is an interesting stock. It's in amongst these companies that, of course, over the last couple of years has had all sorts of problems with their inventory supply. But recently, there's been some visibility, and you can see part of what we've got here for Intel, of course, has been what's been happening other chip makers with the artificial intelligence area. But another deal was announced yesterday for Intel in Germany. This one involves the German government and Intel. The American company has agreed to invest more than 30 billion euros to develop two chip-making plants in Magdeburg. Berlin agreed on subsidies worth nearly 10 billion euros. So you can see a substantial part of that investment coming through from the German state. The German Chancellor Olaf Scholz hailed this deal as Germany's biggest ever foreign investment. For Intel, this is the third big investment in 4 days. On Friday, Intel announced a $4.6 billion investment in a chip plant in Poland. On Sunday, Israel unveiled that the chipmaker would spend $25 billion on a factory there. So that's where we are. Intel, a shadow of its former self, after that big 64% drop from the highs that we had back in April 2021 on those concerns about supplies of chips and the failure of these chip-making companies to fulfill orders. Some of that coming through as a result of what we saw in COVID, some of it because of the high demand for chips for electric vehicles and new ways of entertaining and using interactivity through digital computers and other forms of communications which require these new chips. Intel has finally found its feet and is now on a bit of a rip at 36.46. This stock will open all sessions on the IG platform at 9 o'clock this morning. And it's worth noting as well this morning, FedEx reports its earnings before the market opened this morning. The Street expects earnings of $4.86 per share, a 42% increase on the previous quarter, but a 29% drop on the same quarter this time last year. Weak global freight demand is expected to weigh on the company's top line. Revenues forecast to fall around about 7% year on year to 22.59 billion. It's not an all-session stock on the IG platform. It closed out Friday's session at $233.49. The area to watch out for if you do get a good figure will be a break of this line of resistance, which was established back in August last year at $240.80. Now, as promised, let's get an update on the electric vehicle market ahead of the Battery Raw Materials Conference, which is taking place in Las Vegas a little bit later on today. So if you're invested in EVs, it could well be worth your while taking a look at some of the headlines coming through from Las Vegas later on. Demand for electric vehicles, metals, has been spiking with this EV transition. And ahead of that, there's been plenty of development in the EV space. Here's IGTV's Angeline Ong.
I want to tell you something quite remarkable. This week, we've heard BYD launching a new brand of EVs ranging from off-road to sports cars. The new brand is called Fengtengbao. Nothing new there, but this is where it gets exciting. Its first model will be a sports utility vehicle with the codename SF, pitting it against Tesla's Model X. Now, none of Tesla's rivals are even close to catching up, especially on the all-electric deliveries just yet, but the competition is definitely heating up. Some industry experts have said there could be 200 to 300 EV companies in China alone. Also looking at Toyota. Biggest news out of this space is that after years of being criticized for being slow to the EV game, Toyota blew the market away with its battery plan. The Japanese car maker's new battery tech promises a range of 1,000 kilometers. That's right, 1,000 kilometers, almost double the range of even the Tesla Model Y, the world's top-selling EV.
Angeline Ong ahead of the Battery Raw Materials Conference taking place in Las Vegas later on today. Let's take a look at oil. Not unrelated in as much as this auto sector that's moving away from using fossil fuels. We've seen a continuation of this drop in the pricing for, this is Brent. We've got this capping out at this falling line of resistance. We're currently trading at 76.03. We're holding on to yesterday's losses. The price target for me is still this line down here, which was established with the lows we had back on the 17th of March at 70.10. Brent currently trading at 76.04. If you are short on this, your stop goes above that line of resistance. And while I am looking at what's going on in the commodity market, just sort of catch up on what's going on with gold, which, to be frank with you, is not moving anywhere, but it is finding support on this blue line here, which is the 100-period moving average. If you do get a break of that, you're then short on the way down to this 1910, which is a 61.8% fib retracement on this big move that we've got, which was established with the first lows we had back on the 28th of Feb and that swing high at 2082 in May this year, that record high for the price of gold. So gold is not too far away from a record high, but it is trading frustratingly sideways for those that are invested in the gold sector. That's it from me. We're back at 10:30 with Chartered Markets. I'll be back a little bit later on as well with a look at how Intel opens all sessions on the IT platform at 9.